As we get started with today's video, I just wanted to remind everybody that if you have not taken advantage of our Black Friday discount, we are officially offering 40% off the Edge Finder currently, and you can find out more information by using the first link in the description to chat directly to a member of our support team. People who send us a message today actually get 45% off if you send us a DM on our website. The reason we do this is because we want to actually have a relationship and conversation with somebody who is interested in the Edge Finder and make sure that we can answer any questions you might have about the software prior to purchase. So don't miss out on our biggest sale of the entire year, 40% off the Edge Finder. Send us a DM, let us know you're interested, and we will hook you up with that extra 5% subscriber discount. So we've got a whole lot of stuff to talk about in today's video. The dollar index is still hovering around the 106.5, actually right on the dot, 106.5 here as we record today's video. And I wanted to talk about what this potentially means for us going forward. At the same time, the stock market is bouncing back here today, and I did get trailed out of my NAS position, but am still in my SMH trade. This one is trying to come back to life from the depths of my position, almost hitting my stop loss here and reversing. We'll see if this one can continue to bounce, but the NASDAQ, the S&P are slightly in the green here today, and we'll see how this plays out here for the rest of this week. We had a big sell-off here that occurred last week, coming down for a few days, and now the question is, can we actually see a bounce at this key level of support for the S&P 500? Meanwhile, Bitcoin is going crazy, and this is actually quickly becoming, it might be one of my top positions. Well, it is one of my top positions, but it might be possibly getting close to my biggest trade of the year, which absolutely surprises me because I did not, when I took this position, expect for it to be so explosive to the upside. But this current position from where I bought it is up 33% in just about 2 weeks, which is an insane move. And I wish I had more of these kinds of trades, but Bitcoin going crazy following the election decision. Of course, Donald Trump, JD Vance, all those Republicans seem a little bit more oriented towards less regulation, and less regulation is practically Bitcoin's middle name. Now, I don't know what Bitcoin's first and last name is, maybe just Bit and then the middle name and then coin. I don't know. Anyways, Bitcoin loves the idea of less regulation and a government that may not get in its way. Again, people are excited about Bitcoin. I'm seeing enthusiasm that I have not seen in the crypto space for a couple of years now. And the question is this one big 2021 all over again where we saw the big melt up followed by a crash? I don't know, and that is why I am taking this as an opportunity to trail a stop loss. Now, I love trailing stops, and at the end of today's video, you'll get to see a clip where I discussed my trailing stop method on today's live stream, but we'll get to that in just a moment. Meanwhile, I am trailing stops on my Bitcoin position. I'm trading IBIT, which is a iShares Bitcoin Trust ETF, and I really think that this does have the potential to make the run to 100K. Now, if it doesn't, and it reverses course and crashes lower, I know what I'm going to do. I'm going to stop out of my position and take profits. But if it can continue to run up to 100K, my plan is to trail stops behind higher lows in this market as long as I possibly can. I recently updated my position inside of the Discord group where I share all of this. We do have a free variation of the Discord as well as our VIP service, which allows you to see the full trades. I mentioned this at the beginning of the video, but of course also the just like the Edge Finder is 40% off, so are our memberships. If that is something you're interested in, if you'd like to see the trades being taken, you can use the links in the description down below. Gold is bouncing back up 1.85% here today, seemingly finding support around the 2560 level, but I mentioned this on stream and I want to repeat myself here. Let's be careful about this rally because we recently had a rally that looked very similar. It looked very, very bullish on the day for gold, and that ended up actually just being a reloading opportunity for sellers who then took it lower. So now I want us to kind of think about this. We had some level of support here. It did not hold, it broke. We had a key level of support here. It kind of held, but then it broke. And then we had another level of support. Broke right through. Now we've hit this level of support. We are seemingly seeing a nice start to this bounce. But the question is, for those of you who are bullish, what I would look for personally, I'm not bullish on gold right now. I'm very much neutral and actually slightly leaning bearish, to be honest. If we can start to see a breakthrough, if you start to see higher lows, higher highs, then I will readily admit that my idea is wrong and that perhaps bulls are back. But for now, I want to break down why I'm a little cautious on gold from a bullish perspective. Now, if we take a look under the data scanners, we go gold and silver, what we can see here is that gold is currently getting a -4 score on the Edge Finder. And that's just fancy phrase for, after looking at all the different indicators that we sort of study within the Edge Finder's algorithm, we are left with a -4 score. Now, for those newer to my channel or unfamiliar with the Edge Finder, a -5 or lower score would be considered bearish. You can see by this little thermometer here, or whatever you want to call it, speedometer, I'm not sure. It's getting close to bear territory. And one of the big reasons here is that when we look through this scoring chart, a lot of people like this because this helps to break down how the score is coming about. What we can see is retail traders are very long gold currently. It is a very, retail positioning seems very heavily long. But what's a little mixed is that so is institutional money. Institutional money is very long, but on the weekly basis, they closed out a lot of long positions, equating to a bearish weekly change for the smart money moves and the commitment of traders data. And if we take a look at retail sentiment, we already talked about that. Seasonality is another one. The historical return for gold during the month of November in the last 10 years is roughly -0.36%. So we have a negative expectancy there. So that is bearish. The trend to the downside here is clear on the daily chart, at least for now. We'll see on the weekly chart, you might point that looks a little bit bullish, but we'll have to see how price action shapes up. And then going through the economic data, remember the way we score this is that good economic data is perceived as bearish for gold, because good economic data in the US means a stronger US dollar, which is a negative catalyst in most scenarios for gold. So when we take a look at GDP, this is good for gold. Manufacturing was a little weak, good for gold. Services, strong, right? Not so great. Retail sales, strong. Inflation, still elevated and ticked up a little bit, so slightly positive. Employment change, right? Jobs data was real weak. That's good for gold. Unemployment rate, if we take a look at this, right? Unemployment rate remained unchanged, so we'll give that a neutral. And interest rates seem to be rising. That's a bearish catalyst for gold. And when I say interest rates, specifically what we use is the 2-year yield, and we can see that that is trending up recently. So I just ran through how the Edge Finder's algorithm gives a -4 rating to gold. And the reason I did this is because we're at a -4. If we get to a -5 and I see a technical setup, I am probably going to look for a short opportunity on gold. And I believe that would be the first short trade that I actually take on gold this year. So it's pending. It could happen. It could not happen. And again, what you'll probably want to look out for is if you have the Edge Finder, I'll be watching for a -5 or lower in terms of a scoring for possible sell setups. We're up 1.94%. I'm curious to see if that persists. And if so, if we start getting up into this range here of resistance, I might be tempted to possibly try the short side of gold for the first time this year. But still just waiting to see. I'm waiting for confirmation from the Edge Finder and a price action setup that I like. I also want to disclaim, sometimes people will say, Nick, you're looking bearish on gold and it kept going up. Well, if this thing screams higher, then first of all, I'll admit that my theory here is completely off, but also I have to sort of also disclose that I'm not taking a short position today unless we get the setup. So I have a possibility of getting short, not a I'm short right now. And the euro is still under a ton of pressure against the US dollar. That recently, explosion in the dollar index has been a real troublemaker for a lot of different charts, especially gold and other currencies. We can see euro dollar looks very, very bearish. In fact, I believe on the Edge Finder, if we take a look at top setups, this is why we consider trend in the score. A lot of things on the Edge Finder are pointing bullish on the euro versus the dollar, but the trend is giving it a -2, really holding it back from entering that bullish territory. This is why confirmations are very important. Confluences are very important. We want to cross the trend data with the economic data. This is keeping me neutral right now. And I'll watch for this to change directions on a price action basis before getting any sort of bullish setups. Now, how do you even start to look for a bullish setup on the euro dollar? Well, I'll tell you right now, I don't. But if we start to see higher lows, higher highs, and we start breaking structure similar to what we just discussed on gold, then possibly there's some setups there. But right now, there's so many factors that are very strong for the dollar, like strong economic data, hawkish remarks from Powell last week, basically indicating that he thinks the Fed can take it slow and does not need to be in a rush to rate cut, and the expectancy of Donald Trump to cut a lot of taxes and increase a lot of tariffs. Both of those two things are potentially inflationary. Remember that if you give tax breaks to everybody, it doesn't mean that money just is no longer a thing. If you give tax breaks to people, you still got to print the money that is needed to spend money. But the idea, I suppose, from the Republican Party would be to cut government costs and to also afford people tax cuts. And from purely a market's perspective, stocks typically love that. Tax cuts are great for companies, but we'll see how that actually impacts the overall economy in the coming years. Speaking of stocks, the S&P 500, the NASDAQ, both look pretty strong. For me, with my NAS position, I went long here, trailed out right here. If this thing comes down hard and we get a bullish setup, then I'll be probably looking for a trade. But currently, just going to stay on the sidelines for the NASDAQ for now. I mentioned earlier in this video that I'm going to just give a quick clip here from the live stream today, but I'm actually going to surprise you with 2 clips from the live stream because we had a great conversation today. By the way, if you want to join the live streams, they're Monday through Friday, usually around 8:30 or 9:30 a.m. Eastern. It depends on what news events are happening. Major news events, we're pretty much always streaming. Clip number 1 is going to be my trailing stop approach, which some people had some questions about today, and I discussed my SMH trade and how I'm handling that. And clip number 2 is the importance of recognizing the slow and steady approach rather than trying to quickly make money in markets. I do still have my SMH trade. Let me show you a losing trade today. This is breaking my heart, man. This sucks. I had a trade here that was a monster winner for me. So going off of what I just discussed, right, about how trading for money only is not good, this is a good example for me. This is a live example of a trade that was up at one point, guys, $30,000 for me. And you might say, well, Nick, did you just absolutely fumble the bag and now you're floating a minus $4,500 loss? And I'm going to defend this because I don't like it either. Like, I wish I had taken profit. In hindsight, I totally agree with you. I should have taken profits right there. But here's the thing. Let me defend myself first. Why did I not trail a stop? Why did I not lock something in on this trade? Well, if you're familiar with my trading style or my technical trailing stop method, then you can just use this as a refresher. But if you're newer to my streams, this is what I typically do. Let's say we have something trending up, and let's say that I take this trade, right? Let's say that my rules, I like the fundamental setup. I do like the semiconductor industry. So I get this setup and I put a stop loss, right? And I put my stop loss, whoops, wrong color. Let's do a red color. So here's my entry. This is the setup, right? And this is exactly what we're looking at right here. This is the trade. So what I did when I took this trade is I said, okay, this is my area that I need it to break through in order to trail a stop. And again, I know people will say, Nick, you should have done this. You should have trailed stops. You should have done this. But let me just tell you, like, first of all, I'm not going to change what I do because I've done it for a long time, and I don't, I think you should have the same respect for your own strategy. Don't look at comments and people's commentary to make changes. Do your back testing and study your stuff. That's where you should make decisions. Well, okay, so this is my target. Now, when I say target, that's not where I'm putting a take profit. That's where I look for this scenario to play out where, okay, if we take out those highs, then I trail stops. This is my rule. Because the reason I do this is because what happens oftentimes is that the market will stutter at these highs. Let me not do dotted lines because that makes it difficult. What the market often does is it comes up here and it chops around a little bit and then it breaks out. That happens very frequently. So what I like to do, and sometimes it works, sometimes it is annoying like this, is I like to look for a clean break through the highs as my signal to then move my stop loss into profit. Okay. So if I don't get that, I don't trail my stop. And here's the difficult, painful downside to doing that approach is sometimes this isn't just a correction. This is consolidation that turns into a breakout to the downside. Sometimes that happens. Now, had I trailed a stop in this environment, then yes, this would have been the right play. I would have made money on the trade, but I chose not to. I chose to stick to my rules. So why the heck didn't I trail a stop? It's because my rules don't say to do that. My rules are wait for a break through the highs in order to trail stops. And I'm not going to change it just because this time around it didn't work out the way I wanted it to. A lot of times what happens is market comes up, tests this area, chops around a little bit before breaking out. So I don't want to put my stop loss because this has happened to me many times. And if this had happened, I would be very annoyed, right? If I had trailed a stop, taken a smaller win, and then the market exploded from there. What I'm trying to say is you can either trail stops very tightly or you can trail stops very loosely. And if you trail stops very tightly or very loosely, both of them have upsides, both of them have downsides. In this case, this is a good example of a frustrating situation in which my choice of the way I trail stops was not as good. And it's possible that I probably will take a loss on this trade, which was up massively. And psychologically, that's difficult, but that is part of trading. It sucks, but it is what it is. What many traders think professional traders do is they think that their equity curve looks like this, that they're just killing it, that they know what the market's going to do, that they have some sort of system that is just impeccable and always on the right side of the market. That's what people think profitable trading looks like. When the actual reality, after I've done hundreds of podcasts, I've been interviewed, I've interviewed others, I've interviewed many very professional people in the trading and investing world, and all of them are on this train. Sorry, that's too big. Hold on. The green line is actual practical trading results. Okay. So the thing here is, this is what real trading results look like. Okay. Now, the reason I point this out to you is because a lot of traders are blinded by thinking that this is what trading looks like. And so they're chasing that sort of performance by risking too much per trade. They're frustrated when a trading strategy goes into a losing streak, right? If you believe this, you are holding yourself from becoming a profitable trader. If this is what you believe good traders do, it is putting a obstacle. It's like putting a brick wall in front of you and trying to become a profitable trader. The second you give yourself a break and stop saying, I need to become rich in the next 3 years of trading, the second you say, okay, I am going to get absolutely humbled and just say, I just want to make more than I lose. I don't want to make fast money. I don't want to make 10% per month. I don't want to make 20% per month. I want to make 1 freaking percent per month if it means I'm making money. I just don't want to lose money, right? And even if you do average 1% per month, you're still going to have months that are down months. Once you realize, because look, let's say that this performance is 2% per month average, right? 2% per month average, you are still going to have, with your 2% monthly average returns, you are still going to have periods of time that look like this. That's a losing month. This probably puts you in a losing month. That's a losing month. That's a losing month. That's a losing month, right? You're going to have, let's just say this is a few years of trading performance. You're going to have losing months. You may even have losing quarters, and it's possible to even have a negative year as a profitable trader. Expectancy, right, does not mean that if you are expected to make more than you lose in trading, it does not guarantee that you're going to have a profitable month or even a profitable year. It's very hard to accept that because that does not sound attractive. That sounds like that does not sound fun at all, right? But trading is not fun. Trading is profitable trading is grindy and slow, and over time you can make a ton of money. But in the short run, you have to accept, oh, I'm not going to make a lot of money quick. Unless you already have millions of dollars, trading is not a great way to make a ton of money, right? And I say that with the privilege of being well capital. I have plenty of capital at this point, but there was a time where I had very little trading capital. And when I realized what I'm telling you right now, I went through a period of time where I was really frustrated and questioned if trading was even worth doing, right? What got me to the other side of that? People ask me that all the time. They say, well, Nick, if you trade with a small account, like, and you realize like you're not going to make very much from trading, because slow and steady means slow gains over time, then what kept you doing it? And the answer to that, to end this out, is an actual interest and a love for financial markets and learning things, not for making money, not for, trading, having a big trade and feeling the rush of the trade. That's not what I'm saying. What kept me doing this for so many years and actually allowed me to start making this number worthwhile was finding new ways to earn income and build my trading account. That's first and foremost. But number two, what kept me doing this so long is an actual interest in markets. I love learning about seasonality. I love learning about tracking institutional money. That's very interesting to me. And then also finding better ways to track consumer sentiment or taking a look at economic data and understanding what it truly means. That's the stuff, that recipe has worked for me. And if you are looking to mirror that process, I would leave you with this idea that if you plan to be a profitable trader, make sure you're developing a true passion and interest for markets. And if for the next 2 years you could only trade a demo account, would you still do it? If you can answer yes to that, if you can answer yes, I'd like to learn and just trade on a demo account for the next 2 years and I don't care to make money, then trading might be for you. But if you can't say yes to that, trading probably is not for you. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, 8cap. 8cap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your 8cap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out 8cap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.